Are you wondering if you can use a large cash gift from someone to buy a house? Well, the answer is yes. And what a generous way to help first time home buyers in this expensive housing market. This home investment takes a lot of planning, but the good news is that you absolutely can use a cash gift from your parents, relatives, or even your spouse for a mortgage down payment. But you must follow strict underwriting rules. Nothing is more embarrassing than having someone close to you give you a nice large cash gift and then you get mixed up on what is allowed and you have to ask for very personal information from the gift giver. So let's get you organized from the beginning so this is easy. The key is knowing exactly what not to do before you apply for a loan or make an offer on a house because unexplained large deposits trigger scrutiny, intense scrutiny from lenders. And even if you move the money around or deposit the gift without transparent paper trail, it can completely delay or derail your home purchase. The truth of the matter is that, yes, it's a gift and a thank you and probably a few hugs are in order. But the reality of down payment gifts is that the IRS and the mortgage lenders have decided it is their business to look over your shoulders. You can think of it as a gift with eyes on it. Lenders want you to have the money, yes, but they also care where it comes from. In the back room of the mortgage office, they are legally required to verify that your down payment funds are true gifts with zero expectation of repayment, not a hidden personal loan that silently jacks up your debt to income ratio or your DTI. So they track and trace every single dollar and where it came from. This part of the process will become more and more automated in the future. So the first step is recognizing who can gift you the money. And this is quite exciting, as I'll explain. You have to look at the official definition of an acceptable donor. Mortgage guidelines typically restrict this to close relatives, and that is identified as your parents, your grandparents, siblings, spouses, aunts, uncles, domestic partners, and fiancés. So those are not allowed would include somebody in a third party with a financial interest in the real estate transaction. So think about this. No, you cannot accept a down payment gift from your real estate agent, your loan officer, or the builder, or even the home seller. If a seller or an agent wants to contribute financially, it must be done legally through official closing cost credits or a price reduction, not a cash gift. And no, too, the closing cost credit needs to be at or below the actual charges. So, for example, if the closing cost credits are 10,000, the credits can't be 15. Now, what's exciting about this is if you are a first time buyer and you're buying with someone else, perhaps one person has a better debt to income ratio or a better credit score, but the other has the money. So let's say you're going through the mortgage process and one of the spouses is on the mortgage because of what I just said, and the other person gifts the money to the spouse. Honestly, this happens a lot. So, yes, your wife or your husband can gift you the money for the down payment. And just FYI, because you're married, there are generally no strict season funds restrictions between the two of you, but you still have to follow the standard paper trail procedures, and I'm going to outline those so that the underwriter does not flag the account transfer. So let's review some of these definitions and the words so you don't get scared off. Two most critical rules are seasoning and paper trails. Season funds, that is a 60 to 90-day window. That's not very long. It will probably take you much longer to find the house. You can even plan this out with a relative that's gifting you the money because if you are a year or two away, you can put it in a savings account and let it sit untouched in your savings account. And that money eventually becomes seasoned, like on day 91. Lenders are only looking at the last 2 to 3 months of bank statements. If the gift money was deposited before that window, it shows up as your initial asset pool, and a formal gift letter might not even be required. But let's say it's not like that. And it's like, oh, we found the house and let's pull this together. Then the paper trail becomes intense. So that paper trail applies to recent gifts, and you must show a flawless asset trail. You will need to provide documentation connecting the money directly from the donor's account to yours. And this includes full 30-day bank statements that delineate the transaction history, showing the funds leaving the donor's account to your account, copies of cleared checks, wire confirmations, and certified withdrawal slips. It's a lot and it's detailed. One critical note here: do not commingle your funds or move the money. Once the gift lands in your account, leave it exactly where it is. Moving the funds around between multiple savings and checking accounts makes the paper trail a nightmare to verify, and it will probably delay your closing. Just keep it simple. Many buyers set up separate savings account just to hold the gift funds so it's clean. Now let's talk about the gift letter requirement. No matter what loan program you use, if the funds are not seasoned, 60 to 90 days, both you and the donor must sign a formal gift letter. Your loan officer will provide the exact institutional template required, but every gift letter must state the exact dollar amount being given, the donor's name, their contact information, and their legal relationship to you. A clear legal confirmation that the funds are a bona fide gift with no expectation of repayment is required. The gift funds are treated differently also depending upon the mortgage. So, who can give you money is also tied to your loan types. Sometimes buyers find the house and then they decide on the mortgage, which is not great if you are receiving gift money. So, here are the loan rules that vary by mortgage type. So, let's hit it. Conventional loans. Gifts are strictly allowed immediate family members, domestic partners, and fiancés. FHA loans are a little more flexible. They can come from family, close friends with a defined interest in you, employers, charitable organizations, or local homeownership programs, also called down payment assistance programs. The VA loans, because VA loans offer 100% no money down option for veterans, gift funds here are rarely used for a down payment. Instead, they're used to cover closing costs and prepaid fees, which are quite high under the VA loan. Everyone asks about income tax applications. It's the myth versus the reality. There's a massive amount of information that is misinformation out there regarding gift tax. Let's clear the air on how the IRS tracks these funds. The recipient never pays income tax. If you receive the down payment gift, you do not declare it as income. You do not owe a single penny of tax on it. Now, there's an annual exclusion of $19,000 for 2026, and the IRS allows an individual to gift that $19,000 per person per year without having to report it. That means a married set of parents can jointly gift a child up to $38,000 in a calendar year, completely under the radar of the gift tax reporting. Can they gift more? For example, $100,000? The answer is yes, it's completely legal. If a parent gives you $100,000, they just simply have to file IRS Form 709. It's a voluntary gift tax return to report the amount over the annual cap. However, they still won't pay out-of-pocket taxes. The excess amount is simply deducted from their lifetime estate tax exemption, which sits comfortably in the multi-million dollar range. Individuals can gift up to $15 million from federal, estate, and gift taxes, and married couples can protect to a combined $30 million using portability. So, how does the IRS track this? Under the Bank Secrecy Act, the banks are tracking every transaction. Any cash deposit over $10,000 triggers a currency transaction report. And if you attempt to structure a gift by making multiple smaller deposits right under the limit to avoid a CTR, it's illegal and it will be immediately flagged in your account for suspicious activities. Always be honest and transparent. See how a single innocent question like, can I use a cash gift to buy a home, instantly opens up a complex web of banking regulations, underwriting guidelines, and federal tax codes? And this is just one question. This is exactly why first time home buyers feel completely buried in stress. You are likely highly skilled and trained in your own profession, and you know your field inside and out. That's why you're able to buy a house. You've saved a lot of money, you're doing well in your job. But the moment you decide to buy a home, you are suddenly expected to master five completely different industries simultaneously: real estate agents, negotiating skills, mortgage lenders, banking rules, home appraisers, structures, environmental issues, pest issues, real estate law, how to hold title on the property, transfer of title, home inspectors, all kinds of details. These industries, they all have their own hyper specific licensing rules. There's changing federal regulations, there's corporate products, and competing incentives. Trying to navigate all five at once while making the largest financial decision of your life is the perfect recipe for homebuyer remorse. Unlock the key to homebuyer happiness. You don't have to figure this out by trial and error. Stop the guessing games and protect your hard earned money. Join our free class, Homebuying Chaos Unwrapped, where you will learn who does what, why, where, when, and how. The gears that turn behind the scenes and who's actually in charge of the transaction. And hint, it's not your real estate agent. Claim your free spot and take control of your home buying journey. I'm Julie Marion with the First Time Homebuyer Workshop, and we cannot wait to meet you. Bye for now.